Right, we are live. It's what, September 12th, 2019, 12 noon Eastern Standard Time. And I told you guys we were going to be doing a live case study. I like doing them live so that in case you want to ask questions about just how it works or what's possible, you can ask questions. So you're looking at a screenshot of a trade that from our real account that we recently closed out. And I like to do these from time to time. I don't do every single trade, but every now and again, I like to pop in here and show you what's possible from learning the information. So that leads me to my disclaimer. Maybe we should do the disclaimer first. Number one is that we can't guarantee that you will make this kind of money. All right, so that's number one on the disclaimer. Number two, this is not an income claim. The market fluctuates up and down, but what we can guarantee you is that if you learn the strategies and the best time to apply them, that you'll have the tools in your toolkit to create these type of opportunities for yourself. So that's what I want you to take away from this. Takesha from New Orleans just joined the party as well. So welcome. By the way, we got Gene from Florida, Frank, we got Peter, we got Carlo from Miami, Giorgio, Ron, Rose, Myron. I'm just reading off a few, especially for people who may be watching the replay. So let's get into it. This is the trade from my real account. All right. And so let me walk you through. Angela, how does it look? Do I need to blow it up bigger or is it good?
I think you could go and zoom in just a little bit. That might help.
How about
There
that?
we go. That looks nice.
That's better. All right. So I always like to say, if you know anything about Charles Schwab, they don't have a paper trading account. So there's no way to get a virtual account like this. I blocked out my real account number there. So um, don't worry about that. But let's talk about the trade, okay? So I'm gonna take you results, then I'm gonna go back to how we found it and how we played it. Okay, so this was a put option trade, and the total cost of the initial trade was about $55,000. Okay, so you see cost basis right here. Total trade cost was about 55,000. I'm not going to talk about this one just yet, the second level, because I was able to milk an extra 1,300 out of it. But total cost 5,500 for the trade, and then the total profit was $25,000. Okay, so let me bring in my calculator from my math challenge friends. All right, because I want to make a not a point, but I guess it is a point, sort of. Where's the Oh, actually, here we'll bring the calculator in by hitting this button. So if you put up, if you bring back what $25,000, $25,995. Can we just round that up to 26,000? I think we can, ladies and gentlemen. Then divide that by $55,000. We're not even going to include the extra 1,300. Okay, that is a 47% return. Okay, so why am I spending some time here on it being a 47% return? I'm spending some time there because somebody will look at this and say, but I don't have $55,000. It's not about having $55,000. It's all about the 47% return. For me, that happened to be $25,000 off of a $55,000 cost. But if you put up, right, I don't want to write in red. Red means like don't do this or something, right? Let's put it up in green since we made some green, all right? 47% return, all right? It doesn't matter. If you started with $1,000, okay, you came out with $1,470. If you did the same trade with $10,000, you came back with $14,700. Okay, so it doesn't matter how much you have to start with. That's the first thing I want to point out because people always go, well, I don't have 55,000. It don't matter. If you had $100, you came back with 147 minus commission. That's what I want you to take away from that. Does that make sense? Give me a thumbs up or a heck yeah in the comment box if that makes sense. Someone says they don't see my screen, they just see me. Now you see my face in the whiteboard. All right, if you're on your phone, make sure you got the right settings. All right, Ray Hogan hit me with the thumbs up. Takesha hit me with the thumbs up. All right, so let's take it back and talk about how do we find this trade? How do we play it? And what made us purchase a put option on it? All right, so let's pull it up here. So here's the ticker symbol, which is CAR, C-A-R. Now, one of the patterns that we teach inside of our course is the channel and stock pattern, all right? And what is the channel and stock pattern? If you think about it, it's when the stock channels, right? Like this, boom, boom. Kind of has that S-like pattern, right? Boom. So typically, when we see these patterns, the channel and sideways pattern, that's one of many of the patterns that we teach. But when we see those patterns, most people only know how to make money if the stock goes up. But once we see this, boom, this leg coming down, boom, this leg coming down, and then we saw it again here. You may be thinking, well, how did you know it's going to come down twice? Well, this is something called a double top. Actually, it's a triple top. 1, 2, 3. What does that mean? It means the stock itself tried to run up, boom, and it failed. Tried to run up, boom, it failed. Tried to run up, boom, it failed. Not once, not twice, 3 times it failed. That's called the triple top. Where have we seen that before? We've seen it right here. Once, twice, 3 times, right? So stock tried to run up, failed. Pull it back, tried to run up, failed. Pull it back, tried to run up, failed. So you got a triple top right there, and then you got kind of like a double top right here. Tried to run up, failed. Tried to run up, failed. Okay, so pattern recognition is a big part of this game. All right, understanding based on technical analysis, looking at patterns, what we believe is going to happen. Nothing happens 100% of the time, but based on market sentiment, based on the chart, based on what it's done before. Now, I'm going to also show you, okay, well, let me first go through why we bought the put option. So what we said was if this stock breaks down below support right here, because we know it could find some support or buyers right there. If it breaks down below there, then that's when we're going to take a short position, which is what it's called, or we're going to buy put options. And so when it sliced through that day, that is when we took our short position. Now, let me switch over and be like, well, how did you alert people? How did you know? You guys know I got my own program inside of Power Trades University. This is where we go over this stuff for 2 hours every single Monday. But ticker symbol CAR, all right, was covered at the 1 hour and 16-minute mark, all right? And so that's when we talked about this. And then when it actually started to happen, we like team, the CAR put options are in play. The stock broke support today, downside target 2350. So I like to show this because if you go back to August 4th or 14th on the chart, let me see here. If we go back to August 14th, you can see the date scrolling at the bottom. August 14th on the chart right here. That's the day we called it when it broke down below. And we said downside target about 2350. Now, I am not a prophet, but you can just tell based on the chart roughly where you think it's going to go. And sure enough, the stock fell roughly to about, didn't quite hit 2350. Let me zoom in. It fell down to about 2388. All right, so we're about 30 cents shy of the ultimate price of where it went to. So stock fell down to 2350. A lot of us took positions on this. Look at this guy, up 40%. Nice. Closed out my CAR position, 70%. This is some crazy stuff. But more importantly, I think we talked about when I said, who needs to rent a car when this trade is going to buy you a new car? We like to crack a couple jokes here, but I want to show you when we talked about time to get out. Okay, so right here, August 26th, looking to close out CAR puts, don't want to be greedy. We got the bulk of the trade, maybe time to bring the troops home. This is important because when we go to August 26th, close this out, got out again. This is where I said I turned into a bear put spread, but that's a whole nother story. Now, let me go back and show you what happened. That was August 26th, right? Where I posted that. Might be time to get out. Now let's go back and look at the date. Where's August 26th? About right here. The day before this day, and then this day we got a little bit leg lower. Okay. Now, if you were greedy, okay, and like, oh, I think it can go lower. I think I can make more money. This is gonna put my kids through college. Well, if you didn't get out that day or that day when we talked about it, no more than a week later, what happened to the stock, guys? This thing turned around and rallied, okay? But here's the thing. Are we surprised that it rallied? The answer should be no. Why? Because when we zoom out, where does the buyers typically come in on this stock? The buyers typically come in around this level. Okay, so we could have turned around and bought call options on it, but more importantly, it's all about knowing when to get in, but it's equally as important. It's equally as important to know when to get out. Because the worst thing you want to do is have a profit and then look up, you give all of the profit back, and then it turns into a loss. Okay, that would suck. But that's what most people do because they don't know how to read the charts. They don't know how far a stock can fall or rise, and they just think this is the one that's going to put their kids through college. Does this make sense? Let me just take a break for a second. Does this make sense? Is anybody excited about this? This stuff gets me excited, okay? Because I love sharing this stuff with our members. I love sharing this stuff with myself, right? Because I mean, obviously I make money off of it. And some of them don't work out, right? We got trades that don't work out. But if you take the highly probable trades, more often than not, they're going to work out, all right? Portia says, I can hear the presentation again. Okay, good. Frank Marshall says, nice. Using technical support and resistance levels based on the past. Yes, yes. Ron Rose says, make sense. And the rest of you are just over there thinking about all of the money you probably could have made if you had been in that trade. I'm guessing. I don't know. But let me know if this makes sense to you. All right. So that's literally. So let's go back. We found this trade. I want to talk about the time frame. We found this trade. When did we post this? August 13th. Okay. And then we looked to get out of the trade no later than August 27th, 28th, because I turned mine into a spread. Okay. So August, one more time, August 13th, 27th. Okay. If you look at this from a mathematical standpoint, guys, where are you going August 13th, right? If this is a timeline, this is time, right? And then here's August 27th, all right? It doesn't take a mathematician, but it does take someone with better art and drawing skills to know that 813 to 827, simple math, this is what? 1 week. This is 2 weeks, okay? 2 weeks, 47% return. You can just chill for the rest of the year. You don't even have to place no more trades, 47%, because most people earn 2%, 3%, 5%, a year, maybe 10% if it's going good, right? But you can just place one trade, okay, and be done in a year. And the reason I'm explaining it this way, because sometimes people say, how much time is it going to take? And, all this stuff, but or people say, it's going to take me 6 months to learn it or da 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 da. But it's like, if it took you 6 months or a year to learn how to place one trade, you just waited. It's September. What is it? Is it August? We're in August. It's August. No, it's September. We're in September. The trade happened in August. But can you imagine you waited 8 months out of the year and you found the right trade. By the way, we find them every week, or at least we look for them every week. That don't mean we always find them, but all you placed was one trade for 47% return. Would it be worth it? You guys let me know in the box. Would it be worth it? Would it be worth it? While I'm waiting on the comments to come in, let me see. Ray Hogan said, so you sold it when it was at the bottom, not getting it yet, very new. So here's what happened, Ray. Here's what happened, Ray. Let me make it even more. Let me bring it down a little bit further. What we did was we bought a 33 strike price put option, okay? So what that simply means is when we buy a 33 strike, I didn't know I was going to teach options, but we'll teach it. Let's do it. We bought a 33 strike price put option right here. 33 strike price put option. So at this point, we can force somebody to buy from us at $33, but it's trading at about 28. Does that make sense? So I can force somebody to buy from me at 33 and it's trading at 28. So for that, I paid about $5 per contract. As the stock falls down to 24, now I can force somebody to buy from me at 33 and it's trading at 24. So I make the difference in between there. So if it cost me like, I don't know, $5 per contract or something like that. And now I can sell it for the difference between 33 and 24. I can force somebody to buy it from me at 33, even though it's trading at 24. So that difference is what, $9? So if it costs me 5 and I can sell it for 9, right? It's roughly about $4 of profit in there. Now I'm making those numbers up. We could look at the real numbers right here and see how much I paid for it per contract. So if it cost me, I bought 100 contracts and I paid 55,000. So if I paid 55,000 for it, divided by, see, this is where I lose. I'm gonna lose somebody because they like, now it's math. So I paid about $5.50 per contract. All right. So that's how much I paid for it. And then when it fell, it increased because put options make money when the stock falls, which is why you got to learn how this stuff works. Okay. It's why you got to learn how put options and call options work, because this is probably opposite of what they teach you in school. In school, they teach you buy low, sell high. They teach you buy and hold it, which is not entirely wrong. But what happens when the stock does this? Most people are just sitting there waiting, like, okay, I guess we got to wait for it to go back up. When instead, you actually could make money from the stock falling by knowing how to buy put options. Okay. So did that help Ray Hogan? Not just Ray. I mean, I'm explaining this for everybody, but did that help Ray? Lonnie Brass said, yes, it would be worth the wait. Peter says, yes, it would be worth the wait. Frank Marshall said, did you buy in the money? So yes, that was an in the money put option. I just explained that. 33 strike price put was in the money. So yes, great question. Frank said, I was curious as to whether you bought, oh, I just answered that. If you bought in, out, or at the money. It was an in the money put option because the stock was trading about right here and we bought a 33 strike price put option. So that was an in the money put option. Okay. So ladies and gentlemen, that's what I got for you. So let me just open it up for questions. But these are the types of trades that we find inside of Power Trades University. And again, if you don't know how this stuff works, you know, that's why we have courses that break down, you know, put options, call options, in the money, at the money, out the money, how all this stuff works, Greeks, naked puts, all this stuff. But I think this is probably a good place to open it up for questions. What questions do you got about the case study? Because this is what's possible, and I love it. And the cool thing about the stock market is you don't need people to make money. Like, people always like, well, you know, if you're making so much money, why are you teaching it? It's like, I don't have to teach it. It's the software that costs money, and web hosting and customer service and webinar software and building a custom website. That's why we have to charge, because that stuff costs money. But you don't really need anybody to actually make money in the stock market. You just go in, place the trade, and go on about your business. You can walk around quietly a millionaire and go on about your day, walking around in flip-flops and t-shirts, right? So let me see. Any questions? This is your time. This is for you. Any questions about any of this? If not, we'll get ready to wrap it up. Frank says, do you have to have a specific account balance to trade bear put spreads? You do not have to have a specific account balance, but you do have to be approved to trade spreads. So, you have to, sometimes the broker will make you take like a test, or they'll ask you a couple questions. And if you don't know the answer to those questions, like what happens if the stock falls, or what's your exercise price, what's your strike price? If you don't know those terms, they might not approve your account to trade spreads because they don't believe you know what you're doing. And basically they just don't want to, most people, when they don't know what they're doing, the moment they lose all their money, they want to come blame the broker. Like, why did they let me trade it if I didn't know what I was doing? So don't have to have a specific amount of money, but you got to have a specific amount of knowledge, which that should be a tweetable. All right. Myron said, how would this have a call? How would this have a call option? I know it was a put. You wouldn't have done this with a call option, so there's no way to use a call option. Now, let me back up. Maybe you're asking, at what point would you have used the call option? You'd use a call option to capitalize on this movement when it's moving up, right? But when it's going down, we're going to use a put option to capitalize on the downward movement. So maybe that's what you were asking. Can I do put options on Robinhood? If you're approved to trade options on Robinhood, you can. I'm approved to trade options, so I can do calls or puts, but sure, you absolutely can. Ray says, how do you figure your rate of return? It's very simple, Ray. You take money in and you divide it by money out. So money in was how much we paid for it, 55,000, and we pulled out 81,000. So you could do it that way. So let's go. Um, Here's a better way to do it. Take your total profit, which is 25,995. Let's just say 26,000, and then divide it by how much you paid for the trade. I paid 55,000 to get in the trade. Okay, so it's a 47% return. If I times it by 100, there you go. You get 47. So that's how you would get your RR, your rate of return. Maybe we should do a video about that, Angelo. How do you determine your rate of return? That means it's kind of simple. I think it's simple, but if you didn't do it this way, you could take your total money in and then divide by total money out. So we brought total money out. I mean, 81,000 basically divided by total
Hey,
cost.
Jason,
Yeah.
we actually can't see your calculator.
Oh, you can't see the calculator off to the side? Oh, I didn't even know that, man. All right, here, let me see if I can do it this way. My bad.
There it is.
See, I can see it on my screen, but you guys can't see it. All right, that's good to know. All right, so then it would be, let me redo it then. So 25,000 or 26,000 divided by 55, total cost of the trade. Boom, you get 47 times it by 100, right? Got to move the decimal over two places, 47% return. That's how you would do it. All right. Peter says, Jason, do you send alerts for your members to buy in when it's time to get in? So the way our program works is you can subscribe or follow me, and anytime I post something, you get an alert. So let's say I were to follow myself because I'm logged in as the university. I can come down here and hit the follow button. If I hit the follow button, you will receive a notification email when Jason Brown posts new content, right? So that's how they get alerts, so to speak, right? But that's whenever I post anything. It'd be up to you to obviously read the alerts. So great question. What else? Bernice says, sorry, I'm late. All right, Bernice, you have to check out the replay. But are you going to post this podcast on your website or YouTube? This is actually a live training. This isn't a podcast, but I think we're gonna do it again live on Facebook and YouTube, maybe. But we'll get you a replay. At least you've registered, so we'll get you a replay. Frank, how did you determine this stock was a valid stock to trade? So I did go over that. We looked for weakness in the market. We looked at the chart and we looked at the pattern. So let's bring it back. We looked at this pattern, which is one of the 3 patterns I teach, which is called a channeling stock pattern. And that channeling pattern says the stock kind of channels, right? So you got these areas of what we like to call support and resistance. You got these areas where it's a good time to buy. And we also have these areas where it's a good time to sell. Okay. And then we saw this short-term support and we said if it breaks down below that, we're going to take a position because we think it can fall down to here, right? And so that was the break down to there. And I think we wrote about it inside the U, right? Didn't I just have that up, Angelo? I'm sure I did. I have to back up,
Yes.
get to it.
It was the August 12th replay.
Yeah.
Yeah.
And so, yeah, I mean, we'd have to go to, obviously the 1 minute and 16 something mark where we talked about it. But honest with you, I think 40 days is just fine. This thing breaks. So I mean, that's what it looked like when we talked about it. Keep going. Maybe it turns around. Test. Kind of like you're sitting through here right now, But we did the analysis like I just showed you. We looked for weakness in the market. We looked for a breakdown on increasing volume. We got it. Let me zoom in. This was the breakdown day, so this was our entry day, and we thought it could fall down, and there it did. We closed it out. So, all right, Angelo, maybe you can read me some of these questions. They're starting to come in a little quick.
Yes, sir. So Emmanuel says, greetings, Jason. For someone who is new to trading, how do you advise the person to learn using paper money since this platform doesn't have it?
So you could do a couple things. You could just get a piece of paper and write down your trades and how to trade. I also do a tutorial on how to do paper trading with TD Ameritrade, Thinkorswim. So I do a whole video on how to paper trade using TD Ameritrade's Thinkorswim, so you can get some practice with that platform as well. And inside my course, I'll list a few other resources where you can do virtual or paper trading. So, but you can totally open an account with TD Ameritrade, and I have a video on that, on how you can paper trade with them. So, and that's a free video, by the way. It's if you wanna check that out, it's I don't know, it's one of these. It's somewhere here. Let me just look up. You see it?
Yep. It's right under how to find profitable trades on the left.
Yeah, it's right here. All right. So yeah, I mean, you can go there and check it out. And then there's some other tools I mentioned in the course, but yeah, you can practice. There's so many ways you can practice, right? But practice is only good as knowing the strategies and what you're practicing, right? It's kind of like lifting weights in the gym. You ever have somebody in the gym be like, you're lifting it wrong, but if nobody tells you, like, you're like, why isn't this muscle getting developed? Or like, you ever see a guy in the gym and they do this, and it's like, no, you're supposed to curl with your arms because you're working biceps, but they like curling with their back, doing like that. So my point is, practicing is only good as having the right form and technique, right? If you're practicing the wrong strategy, wrong technique, you're just like practicing. It's like lifting with your back, and you're supposed to be lifting with your arms, right? That's just the best analogy I could give you. All right. Peter says, thanks. See you in the university soon. We'll be there, Peter. Elvers says, how can someone go about upgrading to the advanced options course? Just shoot us an email or just hit, if you're already inside of here and you're talking about upgrading, just hit the support button, which is contact us right there. And then, just put your message in there and it'll come in the form of email and create a support ticket. What else we got, Angelo?
So Kenneth asked, how did you go about finding the car stock?
I think we just explained that, but maybe he's asking, how do we find stocks every week, maybe? So what I do is I pull up some premium software. I have all these different scans built. So I'll say, hey, tell me what's momentum today. So what's moving today? So you got Boeing moving, you got Apple moving. I also may say, tell me what stocks are falling. So if we're in a bearish market, I'll come in here. I wrote these custom scans. I'll say, find me stocks that are falling. And actually, I'll sort by negative cash flow, see if who has money leaving, and then boom, I'll find some stocks that are falling today. And then I may say, hey guys, I like this look. How far do I think it can go? I might do some research. So it's a combination of scanning, then doing some research. Where do we think it can go? Is the sector down? Is the overall market down? Etc. So I can look for bullish trades, I can look for bearish trades, and then I just put my expertise and experience to work on if I think it's a good trade or not. And we switch over and look at the option chain. There's some criteria we like to consider for picking the right option, because not all options are created equal. It could be a good chart, but a bad option, and that throws off the whole trade. So we just go through that whole analysis, and then I can't show you the trade tracker because that's for paying members. But we take this and we have this thing called the trade tracker. And if you click that button, it'll open it up. But it goes to what we call the trade tracker. And matter of fact, let me see. I'm gonna open it off screen. Hold on 1 second. Maybe I'll show you some of the older trades. Okay, I'll bring it back. So I'll take you back to January. So we'll put the write-up inside the trade tracker. So we'll be like, date observed, what was the stock symbol, bullish close to resistance, here's the strategy, here's the option we want to buy, and then we're out in the form. So this is what the trade tracker looks like. You can see there's some red on here. Not every trade is a winner, but you want more green than you see red, So that is how we keep track of the trades and stuff like that. So hopefully that answers your question about how we find trades, or how did I find the trade.
Awesome. That looks
Let me know,
like
Kenneth.
questions.
Did that help, Kenneth Jackson? Hopefully that helped, man. Frank says, I see the answer to my question. All right, I think that's all the questions. So there it is. I know some of you probably on your lunch break, maybe you're at work. So thanks for hanging out with me, and I hope you enjoyed this. Kenneth said, somewhat. I don't, come on, Kenneth, I just broke that down, man. But hopefully that answers your questions, guys. Obviously, this is a shortened version of what we do and what's possible, but just want to show you that with the right education and the right application, this is what's possible. So we'll leave you with that screenshot. This is what's possible. So get the education, practice, and look up 6 to 12 months from now. These are the type of trades that you could be doing. All right. So have a great day. Carloid said, have a great day, Jason. Thanks for all the advice. Yeah, thanks for watching. Ray says, thank you. Looking forward to learning so much. Awesome. All right. Thanks everybody for hanging out with us. We'll look to get a replay out if you want to watch it again. All right. Have a great day.